So with films like Spider-Man 2 hitting the big screen, Hollywood is looking for its own set of fireworks at the box office this 4th of July weekend. And such movie magic means major dollars for Entertainment Properties Trust, a REIT that manages some 45 megaplex theater complexes in 18 different states. For his outlook on the business of show business, we're joined now by David Brain, President and CEO of Entertainment Properties Trust. He joins us from Kansas City, Mo. Good morning, Mr. Brain.
Good morning. Thank you for having me.
Glad to have you here. Spider-Man 2 broke its record, as just mentioned. The Harry Potter films are raking it in, as well as others, Shrek 2. When you look at the blockbuster films, what's your read now on the health of the box office?
Well, box office is very healthy, has been on a continuing basis just for a number of years. It was the box office leaders, the blockbusters, have been actually declining in share as part of the total box office in the last couple of years.
Yeah.
That's really contrary to a lot of, kind of popular opinion if you read the press, because there's so much focus on the blockbusters. But really, the average film has been growing about 5% a year now for about a decade, and box office is growing at about a 5 to 6% a year, clip. So it's been very healthy, remains very healthy, and the outlook's very strong as well.
You know, of course, we hear about it this time of year with the blockbuster films that are out, but as an investor taking a look at a REIT like this, I mean, I guess someone would question how healthy is the megaplex industry outside of the summer blockbusters when you've got, movies on demand and video rentals and whatnot.
Well, the interesting thing that often confuses people is that home video tends to compete with other home entertainment alternatives. In-home entertainment competes with in-home entertainment, whereas out-of-home entertainment competes with out-of-home. So the movies really, going out to the films at the theater, first-run exhibition, really does not compete with DVD and VHS. VHS and DVD tend to compete with each other and tend to compete with the network programming. So when people go out, they still want a high-value entertainment for their dollar, and that's what they get going to the theater. For about $6 on average across the country, they get a $40 million production value.
Nevertheless, I got to say, I mean, from the research I've looked at, 3 years of pretty anemic growth in consumer and advertising spending here. On average, how many times a year does an American go to the movie theater? Because I remember a few years ago when I was living in LA, it was 8 times a year, and I remember the industry was pretty shocked, thinking that those are pretty poor numbers.
Well, 8 times is pretty typical for Southern California. The U.S. average is about 5.5 times. It will vary a lot kind of regional to region, with Southern California being the highest by far. That's up from about 5 times just about in the early 1990s. So it has been, attendance per capita has been growing over the last decade, has grown about 10%. That's still a very, very healthy clip. At 5.5 times, gives you a box office count in U.S. of 1.6 billion, which makes it the largest form of out-of-home entertainment. Really, it's peerless with regard to that level of attendance.
David, a lot of these theater companies just came out of bankruptcy, I believe, and there was a huge competitive crush, and it's a very capital-intensive business. Have the dynamics really improved that much?
The dynamics really, all the bankruptcies were really generated by the fact there was a reformatting of the industry and a store change. And that store change was from the multiplex, the 4 to 8 theater flat floor, now to the 14 to 24 screen megaplex with stadium seating. And the capital requirements and the ability of the exhibitors to exit their old stores is what caused the bankruptcy cycle. But during that period, a lot of people saw statistics printed by the Wall Street Journal, the New York Times, or other newspapers about declining attendance per screen. Screen count was going up during this recycle period, but now a lot of screens, 5,000 screens have closed in the last 5 years, and now what you have is a very healthy industry, and consumer metrics never faltered during that period. They actually were ascending. You just had a lot of reformatting and capital requirements going on in the industry.
David, quickly, what can you offer investors in this environment? Because not only is your company interested in acquiring, but I also know you're interested in developing properties as well, which has to cut into the bottom line.
Sure. Well, it doesn't cut into the bottom line, really contributes to our bottom line. We invest in properties, and those properties make us a return based on the operations of our tenants. And it's really a very good season right now. Megaplexes are still very much in demand. There's a lot of parts of the country that are still understored with this new store type. It's just like large format retailer turnover, and a lot of the large format locations are still yet to come, and we're developing those, and they're replacing the older, smaller store formats. It's really giving America what they want, which is selection when they go shopping, even at the movies.
Okay, David, thank you. We'll see you at the movies.
Thank you very much.
David Brain, President and CEO of Entertainment Properties Trust.